Welcome to the Tons of Industry Show. I welcome one of the most controversial guests in the business. I'm, of course, talking about Harry Dent from economyandmarkets.com, who joins us today. He has been publishing entertaining and thoughtful books, many of which have become bestsellers since 1989, with his most recent one coming in 2017. I'm reminded every time I speak with him of a survey done about Howard Stern, the most successful radio host of all times probably, where his fans would listen to his show on average for about 2 hours a day, and his haters would listen to the show on average for 3 hours a day. For sure, Harry Dent is one of the most thought-provoking forecasters out there, and it's always great to catch up with his latest analysis of the markets. Sir, glad to be chatting here. How are you doing today?
Good, and you're right. I am hated more than I am loved. And that's a good thing in this business because people don't want to hear the truth, about reality and the markets and stuff. And so somebody has to be the bad guy and be bearish when everybody's bullish, and be bullish, which I used to be in the 90s when everybody is, bearish. So that's what I do.
Interesting. Well, let's start with the positive. And there are a lot of things happening which are, fantastic. Good times are really rolling for small U.S. businesses. 99% of U.S. firms make up the backbone of the economy, small business, and they employ about half of the Americans. They make up about 60% of new jobs, and they're strong right now. I mean, businesses are optimistic, less regulations, lower taxes, 14% lower, right? Corporation taxes is lower. And we are seeing optimism that we haven't since the early 80s. Are you still bearish about the U.S. economy, or is the worst behind us in terms of deleveraging the system from 2008 and going on a new path here?
No, $15 trillion in quantitative easing globally says the worst is definitely not behind us. It's ahead. They've only put this off. And, Lior, I always have to remind people, how did the economy in Japan look in late 1989 when we predicted in our first book that Japan would see the biggest crash in its history and the U.S. and Europe in the 90s would have the greatest boom in its history? How did Japan look in 1989? How did the U.S. look in late 1929? For the greatest crash in history? You can't look at present trends in the economy and predict the future, because trends go up, then they go down, and they look the best when they're up. This is a sign that the economy has been too good, too long, and the worst part of it is this is the one bull market which is now going on almost as long as the longest bull market in all of history, from late 1990 into early 2000. This is the only bull market that has occurred during fundamental trends that are negative. Aging demographics around the world, excessive debt beyond any ratios in history. So this is all about stimulus. And stimulus, you don't get something for nothing. And this bull market is definitely near its end, not its beginning.
Very interesting. I want to ask you about gold. As we're doing this interview, May 16th, gold is broken down below 1,300. The U.S. dollar is surging. Is this a technical, short-term occurrence, or is this part of a long-term trend?
Well, the long-term trend, and again, we call this better than anybody. Gold peaked at $1,934 in September 2011, and when it broke 1525, we said this thing is over. I mean, we were warning it was peaking along with all commodities, and silver and everything else. But we said when it broke 1525, this bull market is over, and gold going down towards $400 to $700. Now, when it hit 1,060 a couple of years ago, we said, okay, it's oversold for now. We were expecting a bounce to 1375 to 1428 in that range. Recently, we put out an update to our subscribers and said, you know what? The dollar is buying after bottoming between 88 and 90 the dollar index for months and months and months. And that's a headwind for gold. And this may be it. Gold's rebound may have already peaked at $1,375. And so I am bearish again on gold. I'd be selling gold on any rallies. I'd also be selling stocks on any rallies here because bond rates, the 30-year Treasury also made a very important break above 3%, a 40-year trend, a channel down in 10-year Treasury bond yield. It broke above that recently. Now, it's only broken a little above, like it would have peaked around 2.98% where we got our people to buy bonds. And now we're telling them, you may have to take a small loss and look to maybe get 10-year Treasuries at 5% plus rates, which would be a gift from God. But right now, rising Treasury rates hurt, and rising dollar hurt all risk assets, stocks, real estate, commodities, gold, etc. So I would be we've been warning people, be in safe assets, cash, short-term Treasury bonds, and long-term Treasury bonds if they go up much, much higher. And then ride the deflation trend, because what the gold bugs don't get, I agree like 50% with the gold bugs, but I have to disagree with them incredibly when I debate them, like Peter Schiff and stuff, because they think, governments are printing money and they're going to print more and more and more and more, and you're going to get hyper and hyper and hyperinflation. And guess what? We've been printing money for decades, since 2000 in Japan, and 3 times the rate since 2013 in Japan. And guess what? Japan has no inflation. Europe has no inflation. U.S. has little inflation, and we're the ones tightening. So inflation is not the outcome here. Deflation is when you get excessive debt bubbles, and you get financial asset bubbles in stocks and real estate and commodities like we've had in the last decade or two. When they deflate, it destroys money and it creates deflation, and deflation is not good for stocks, real estate, commodities, high yield bonds. It's only good for high quality bonds and cash. That's the only place you can make money. And you make a lot of money. If you'd have just been in cash or treasury bonds or AAA corporate bonds in the 1930s, you would have made a fortune because everything else went down and your money bought more of financial assets. Greatest, I call it the sale of a lifetime.
Now, okay, so let's talk about something that is projected by you and quite a few other economists. It's called the demographic cliff, and put simply, it's where boomers, 80 million boomers, will liquidate their stock portfolios and sell their real estate assets in droves in order to fund longevity and longer years of retirement with higher healthcare costs, causing a worldwide panic probably because there are no buyers with the same purchasing power as the American baby boomers, which are by far the richest generation in history. Is this still occurring? Do you see this happening, or will Asian middle class demand coming out of China and India mostly be able to absorb the amount of selling that will be done in the next few years by the boomers?
Well, a couple things here. This is a succession of events. The baby boomers, and we predicted this in 1989 in our first book, that they would peak in their spending as a generation at age 46 in late 2007. And that's exactly what happened. And we've been living on quantitative easing ever since to offset this massive downturn. The second thing they do is they peak in their investments at age 64, 1 year after they retire at age 63. Now, you'll note here, I know everything about people down to when they will weigh the most, when they eat the most calories, when they buy the most cars, buy the most houses. Anything you want to know, I can tell you about when it happened, because I'm like a life insurance actuary. The average person is incredibly predictable, and that makes long-term trends predictable in the economy. So baby boomers first peaked in 2007. Then they'll peak in their investments around 2025 net worth, and then they will die. They will all die by 2039 to 40. This is huge because the other misperception out there, all the demographic people who say they're demographic people, because they're not, because they don't understand what they're talking about, say, oh, the millennial generation is much larger than the baby boom. No. At their peak numbers of births and their peak numbers for spending and everything in the future, they only come back to where the baby boomers were in 2007 at their peak in spending. They don't ever go higher. This has never happened in history. Every generation in U.S. and global history has been larger. So yes, the old people die, but the young people come along in higher numbers and spend more and buy more cars and more houses. This is not going to happen this time. We will never, mark my words on this, never need more housing in this country ever again. Japan has 8 million empty homes going towards 20 million in the next 30 years because old people are dying and there's not enough young people to buy the houses from them. China has already peaked in their workforce, the only emerging country, and everybody thinks China's going to grow at 8% forever. Not going to happen. And China has overbuilt everything with a top-down government that ignores free market capitalism at their expense and just says, we're going to build shit for nobody. That's what they do. That's what they do as a strategy. They have overbuilt every infrastructure from steel to iron ore to condos to roads to, business centers and malls. The biggest mall in the world is empty. Twice the size of the Mall of America. It's empty, and they're turning it into a tourist park because they don't know what to do with it. That's how stupid the Chinese government is. They build stuff for nobody. That is a bad strategy. It will end badly, and it will cause a reverberation around the world in real estate prices and asset bubbles. We're going to see the biggest crash in our lifetimes, I think, in the next 3 to 5 years. And if you don't get out of the way of it, you're going to lose a lot of money. And every financial advisor and every economist is going to say, oh, no, Harry's crazy and that can't happen and governments won't let it happen. Governments have already printed $15 trillion out of thin air to keep this suck-wind economy going. And when it fails, you know it's going to be bad. You don't get, well, at least in my book, I would say to people, ask your gut, do you get something for nothing? Does life teach you that? I say no. So I think we're going to get the biggest something for nothing crash in history in the next few years. So I'm just telling people, I know it's unconventional. I know I'm unconventional. But hey, I was the bullish guy in the late 80s and early 90s when everybody thought the U.S. was dead and Japan was going to take over the world. And guess what? The opposite happened. And we predicted that. Now we're saying the greatest boom in history has peaked in late 2007, and it will crash after this something for nothing stimulus program proves to be what it is, something for nothing.
Well, hey, definitely controversial. I want to ask you, what are your overall thoughts on cryptocurrencies?
Well, that's a great topic because this is another controversial thing and kind of counterintuitive. I think the blockchain technologies that underlie the cryptocurrencies are incredible. It's like the Internet 2.0. It's not as big an innovation as the Internet, but it extends the Internet, especially its vulnerabilities to hacking and security, which is a big. I mean, I'm ready to stop using the Internet at this point because I can't have enough passwords, and change them fast enough, or my credit cards get canceled every 3 months because I get hacked. So the Internet is failing. After succeeding dramatically in communication, it's failing in security. And blockchain technologies are the best solution to this. So I think that's a couple decade trend. I compare the cryptocurrencies to the Internet stocks, which had the greatest bubble of all in the last year of the tech bubble from 95 to early 2000. They went up 8 times in 1 year and then crashed. 93%. I think that's the future for cryptocurrency. They're going to crash in the next year or so. They're going to crash 90+%. They've already crashed 70% at worst, but that happens every other year in cryptocurrency. But and the cryptocurrencies, the digital coins, are bullshit. You don't get anything. You're buying an invisible coin, and you have no ownership in the company. What's that worth? Eventually, nothing. I think the crypto, and I just spoke at a cryptocurrency here in Puerto Rico a few months ago, and my view was like, and surprisingly, a lot of people agreed with that these cryptocurrencies have been a way to fund these new companies at low cost without the regulations of an IPO. It's an ICO because these coins are not regulated. And you just throw them on the internet and people buy them because I hate to say, because they're stupid, don't know what they're doing. And they go up, and so the more they go up, it's a bubble. But it has funded a lot of companies very cheap, as happened in the 1980s and 90s with the internet bubble and stuff. And those companies, the ones that survive, and I'm telling you, there can be 1 out of 10, could be like Amazon in the future. They're very successful. So I'm a big believer in the blockchain technologies and the companies like, say, Ethereum and possibly Ripple that actually invest in blockchain technologies and applications, not in ones that are just say, oh, we got a coin for Jesus. We got a coin for charitable contributions. We got a coin for corn chips. This is stupid. It's the stupidest thing ever happened in history. And Lior, this is the classic example of how stupid people get at the top of a bubble and think, oh, we're at the plateau of a new era of prosperity. That's what Irvin Fisher said in 1929. That this is what Janet Yellen said a year or so ago, when she was exiting. Oh, we'll never have a financial crisis again in our lifetimes. I'm like, when people start talking this stuff, you should hitch up the wagon and go to the hills, And ultimately, I think one of the best investments coming out of this crash will not be the typical Fortune 100 companies in the U.S. or Europe. It will be emerging countries in Southeast Asia and India. It will be gold and metals and commodities. Once they crash, and again, I'm a big fan of gold and silver long term, but I'm not a fan right now because gold went up 8 times in 10 years, and that was a bubble, and it has to correct itself, and gold is an inflation hedge, not a deflation hedge, as most people think. So I think gold will go down, but I tell you, gold gets somewhere between $400 to $700 in the next few years. I'm going to be loading up the farm. I do go for $5,000. It's just most gold bugs will be dead by then. The next commodity cycle, it peaks in 2038 to 40. I'll be dead by then, or close.
Well, listen, Harry, I want to ask you this. Is there a price? Obviously, there's a price to be paid, but I want to ask you how you view in your analysis and in your books, how you view the price to be paid for increased deficit spending, which is happening right now in the U.S. because of the reduced tax collection, deliberately by the Trump administration, taking the risk that by lowering taxes they'll obviously create a more vibrant economy and get an overall better tax collection at the end of the road here. Are the consequences for the increased deficit and the ever-largening national debt, is that something that is going to have to be paid decades away, or is this something that other countries will demand reckoning for earlier? It just seems like the US dollar is so liquid and far, far better than any other currency, fiat currency that is out there, that there simply is no simple alternative right now, and therefore there is just no solution on the horizon for what's going on in terms of how governments fund the U.S. deficit, come to the Treasury auctions, and keep sustaining this system, with the exception of Iran and Venezuela and a few political hiccups here and there. But for the most part, you're not seeing anyone raising eyebrows in the global political scene against the U.S. dollar in a very determined fashion.
Yeah, Lior, I mean, you said a mouthful here. The dollar is going up. That is not good. It's not good for commodities, real estate, stock prices. But the economy also kind of looks kind of better. But again, that's what happens at top. So I think this is a time for people to be cautious. We're telling people to be selling stocks, selling real estate that you don't want to live in forever. And even here in Puerto Rico, I am renting my condo in San Juan and only own my long-term vacation property in Calabria, an island off of here, because it's going from 25-acre to 5-acre zoning, which is a huge bonus to me. I could not lose money on this property if it went down 50%. So that's what I'm telling people. Like, this is what happens in times like this. Everything looks good. The economy looks good. All the economists are saying, oh, no problem. Warren Buffett is telling people you can't go wrong owning the highest quality, Fortune 100 stocks. And I'm like, no, I'm sorry, Warren. You may be the greatest investor in history, but you don't know shit about the economy and history. History would say this is the wrong time to be in stocks, real estate, commodities. And commodities have already proven what I've said in the last several years. Iron ore, oil, and major commodities have already been down as much as 80%. That's what happens when a bubble bursts. When a bubble bursts, you don't get a 20, 30%, 50% correction. You get 80%, 70 to 90%. History says this over and over and over. Debt bubbles lead to financial asset bubbles. And when the debt deleverages and the bubbles burst, you get 80% corrections in stocks and commodities, plus or minus, and you get 30 to 50% corrections in real estate. And real estate is leveraged by mortgages, which makes it even worse. So I'm just telling people, this is a good time to take your gains. Don't look a gift horse in the mouth. You've seen the biggest real estate and stock bubble in all of history. Take your profits, protect them, be safe, and then see if I'm right. If I'm wrong, how much more are you going to miss? I mean, the market's gone up this much. How much more is it going to go up? And Trump has done, as you were, suggesting, he's done the stupidest thing in history, is to cut corporate taxes and increase the deficit when we have the highest profits in corporations as a percentage of GDP in all of history. This is the wrong thing to do. $15 trillion of free money drawn out of nowhere in the atmosphere. Something for nothing. Plus now tax cuts for corporations when they least need it cannot end up as a good policy. No way possible. And if you think that's possible, then you're an idiot. That's what I tell people. You're an idiot if you think something for nothing works, because life has taught me something for nothing never works.
How important is it for other central banks to raise rates as well, if it's important at all in your opinion? Because we obviously haven't seen a scenario where the US Federal Reserve goes one way while the ECB and the Bank of Japan and the major countries around the world go in another way. So when, if ever, will we see collective tightening of interest rates, or will the US keep tightening while the ECB and the BOJ keep stimulating?
Okay, this is another good question. This is why I actually like the U.S. dollar, and I like the U.S. economy, because it's the best house in a bad neighborhood. Did we overstimulate? Yes, but we've been tightening since early 2014, and we're tightening more. We're the only country that's being somewhat responsible in pushing rates back towards where they should be, and they're not where they should be yet. You know, we should be 10-year Treasury bonds should be 4%, not 2% or 3% in recent times. So we're doing the right thing, and that's what's causing the dollar to go up. And the gold bugs keep saying, oh, you know, the dollar's going to be crashing. But I'm sorry, Peter Schiff. The dollar's been going up since January of 2008, when the recession began, the great financial recession. And it was up 47% at best and 27% at worst. Now it's going back up again. The dollar is going to be the king here. The dollar is the safe haven, and U.S. Treasury bonds and AAA corporate bonds, the safest bonds, are going to be the haven in a depression like the 1930s, where all risk assets go down. Risk assets mean junk bonds, stocks, real estate, commodities, everything that has risk and is inflated in this bubble is going to go down. And it's not going to go down long term. It's just going to go down where it should have been if we didn't have the greatest bubble in history. And that's what happened in the early 30s. Everything reset back down to reality. And it was 89% for stocks, you know, and it was, ultimately from the top in 1920 commodities, it was 78%. In real estate, it was 26%, because real estate didn't bubble up as much back then. Well, real estate has bubbled around the world, and China is the worst. Australia, where I lecture every year, is the second worst, along with New Zealand. And then it's places like Manhattan and, you know, San Francisco and London and Singapore, all the English-speaking key cities where Asians and Chinese want to send their kids to launder their money out of their country for good education. These are the places going up, and it's only from foreign buying. So the cities with the highest prices today, like Manhattan, like Miami, like London, like Singapore, San Francisco, Vancouver, Toronto, are going to crash. And people think, oh, those are the greatest cities. They'll never go down. Rich people will always buy there. No, rich people do buy there, and rich people lose the most money when financial bubbles burst because they own all the damn assets. People don't get that. Rich people are stupid right now. Rich people are going to lose the most money. I'm here not to protect the everyday citizen, Homer Simpson, because I can't. They don't have that much money at risk. The richest people are going to lose the most. And I'm trying to warn them, take your money at the top of this bubble, whether you're a little early or a little late, and run. Baron Rothschild, the richest guy of the 1800s in Europe, when asked what was the secret to his wealth, he simply said, I always got out a little bit early. He understood bubbles. I understand bubbles. I'm telling you, this is a bubble, and any economist or expert that tells you this is not a bubble, look at the charts in my book, Zero Hour. If this isn't a bubble, I don't know what ever is. This is the greatest. This is not just a bubble. It's the greatest bubble in modern history. And Bitcoin has exceeded the tulip, which was the most extreme bubble in all of history. First financial bubble, which occurred for one good reason. There were future markets for the first time. And so that bubble was the greatest. And then the 1720 bubble in stocks occurred. South Seas bubble in England, Mississippi bubble in France. That was the first time stocks were around that bubble. In the early 1700s. The first stock was 609. So when there are markets that you leverage investing, there will always be bubbles. And this is the greatest in modern history. So take your money and run. Don't kick yourself if you missed the last 10% of this bubble, which I think you can see. I think this bubble could go another few months to get July, August, but I think that's it. Okay. But I mean, the point is, be like Baron Rothschild. Take your money and run while you have it. Because when markets crash, the first crash in most stock market bubble crashes, it's 42% in the first 2.6 months. I have measured this over the last 110 years. Real estate clamps up and just you can't even sell. So real estate works and stuff. It doesn't go down as much, but it's leveraged for mortgages, and you just can't sell real estate. Try selling what today would be a $20 million apartment in Manhattan. Once the markets dry up, you have no chance. It's dead. You won't get any offers unless you're down 10 million, 50% or more. So I'm just telling people, I know I sound crazy, take your money and run.
Now, Harry, I want to ask you, in your opinion, is silver cheap today? Because it's obviously trading at an 80-to-1 ratio with gold, something that has occurred 3 times in the last 40 years. But since your prediction is that gold is going to about $700 to $400 per ounce, what does that mean for silver? And are the two even correlated anymore in a very direct manner, or can we see both of them go in different directions? What are your overall thoughts on silver?
Well, no, they won't go in. They are correlated. Silver just goes down and up about twice the rate of gold. And if somebody put a gun to my head and said, okay, in your portfolio to hedge it, you want to buy metals or precious metals, I would definitely buy silver. There's no question. Silver has been beat down much more than gold. And I'm still looking for silver to go to $5 to $10, and gold, 400 to 700 bucks. Either one of those, and if it does go that low, I still would probably buy silver, because silver is more dynamic than gold, and will do better in a bull market and will do worse in a bear market. So again, but if somebody says, look, you only have one choice, and you're going to put 10% of your portfolio in precious metals to hedge it, I would definitely buy silver over gold here. Silver is definitely more oversold than gold and a better value, but I do think it's going lower. And just to go from $16 or so here down to 8 to 10, where I think it's heading, that's a big drop. So why I would not own silver, but choice between silver and gold here, easy choice. Buy silver, not gold.
Harry, what are you up to these days? Tell people a little bit about your latest.
Well, most people don't know. I moved to Puerto Rico 2 years ago. I did not move. There are incredible tax advantages here for U.S. businesses, and especially for people in financial services and investment and traders and crypto guys and everybody else. I moved here because I could buy a condo on the beach at the quality of South Beach, Florida, where I used to live, for a quarter of the price, and I've always had a retirement property, a vacation property in Culebra, a Virgin Island off of Puerto Rico, which people don't know even exists. And now I can go from my condo 4 minutes to the airport, the local airport, not the big airport, international, local airport, get there 20 minutes in advance, 15 if I have to, and be landing on my island 30 minutes away in an hour from door to landing. That's a good lifestyle. I moved here for the lifestyle, the affordability, and then when I did finally move here, I hooked up with some people that I do interviews with from Santa Monica, California, and they said, "Oh, Harry, we heard you moved to Puerto Rico. Why aren't you applying for the tax advantages?" And I said, "Well, they said I got to hire 3 people and blah, blah, blah." They said, "No, you become part of our company. We've already moved here. You just be a consultant, your own division." Now I'm not only saving 75% of my real estate costs living in San Juan, which I would rather live in than Miami these days, even though it's going downhill. Well, you know what? To me, the downside of the Puerto Rican economy is my advantage. Real estate prices keep going down, cost of living keep going down, and my income does not rely on the local economy because I don't do business here. So I moved to Puerto Rico. I love it. It's got great beaches, mountains, waterfalls, Virgin Islands off of it, including the one I'm on. And I'm just like, why wouldn't I be here? And I think people should consider. I'm telling people in my newsletter, especially retirees, why don't you consider retiring in Puerto Rico? It's easy to get to. You don't give up your U.S. passport. And the cost of living is remarkably lower, especially for real estate. So why not come down here?
Very interesting. Harry, what is your latest book? Where can people find it? And where can people find your website? And what is it?
Yeah. It's the latest book is 0 Hour. You can get it on Amazon. I mean, we don't even try to sell it to people because Amazon's cheaper. We can even afford to sell it. And you know, we have a number of websites. Economy and Markets gets you directly to where you can sign up for our free newsletter. That's what I tell people to do. Just get on our free newsletter. I know what I'm saying sounds kind of extreme, but you know, we know what we're talking about. You get on our daily newsletter, you'll get to know us. And we also have a larger website at dentresearch.com, which explains more of our broader services and what we do. But I could say go to economyandmarkets.com and sign up for our free newsletter. If you don't like it, you can, you know, drop off in a month or two. But I'm telling you, you're going to like it.
Harry Dent, thank you very much for this interview.
Okay. Thank you.